Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. You can also send it in the chat function. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time, so if you'd like to watch it again, you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified of any future releases that we have. The webinar handouts can be downloaded from the handouts tab of your GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know and I'll send you a link or I'll help you find them. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. And the second is a CFD guide, which details all the different products that we offer at FX Choice. It's a fascinating document. If you're watching on YouTube, these handouts will be available in the description box. So please just click show more and you'll be able to see them. Again, we ask you at the end of today's webinar, there will be a short survey where you can get the chance to tell us how we're doing and how we can improve the webinar. Please take a couple of minutes to fill it in and let us know. I know some of you have already filled it in, but for those of you who haven't, please do take that time to let us know how we're doing and how we can improve your webinar. Trevor, I'm sure you all know him, but he has over 40 years experience as a technical analyst and trader. I think nearly 50 years actually, Trevor, isn't it? And was global head of former global head of technical analysis at Bloomberg. So we're in safe hands, I think, today. Trevor, so over to you.
Okay, thank you very much, Dan. Yes, I'm afraid we have to start calling it nearly 50 years now. Yes, indeed. Okay, well, welcome everybody. Thanks for joining us. And you know, I do like questions and any suggestions that you've got. Just put them in the chat box to Dan, and he'll pass them on to me. Let us start with the relative rotation graphs of the currencies first of all. So we got, as you know, we've got a strong dollar, but it's not the strongest. Most of the currencies, including the big one, the euro, are in this bottom lagging quadrant here, so they're weak against the US dollar. Canadian dollar is stronger than the US dollar, so because it's right of it on this vertical axis, and it's also moving north, so it's a northeasterly direction with positive momentum. So this will be one we will be looking at, but really the dominant one here is two really to talk about is the euro and the pound. The euro being very weak, the pound looking more bouncy, and that's to do with its direction in here. Right, so moving now to the euro chart. Let me show you the weekly first of all. And you know, I put on the social media, you know, this head and shoulders pattern, left shoulder, head, right shoulder, quite a few weeks ago, and I got a lot of abuse, I must say, about that. You know, just measuring from the head to the neckline downwards, giving us a minimum price objective of 111 here. And but you know, one thing I've learned in those nearly 150 years I've been looking at charts is that you know, just believe your eyes. You know, it is a head and shoulders pattern here, and it's deteriorating. And the next leg, we know in these head and shoulders are often the momentum increases at this point here. So I'm sure those people won't eat their words, but I think I know what I'd rather be is short of the euro. So the euro is deteriorating. This last week it broke a very, very important level here. The 116 level was the sort of last hope for it, and it broke it quite emphatically there. The MACD is negative. The RSI is weak. It is weak, but it is the dollar which is strong. So here we have on the daily chart the downward channel that's going on here. The MACD here is also weak. The RSI, yes, it's rising. It's at 33, but it's weak. It's down here at 33%, not because it's strong, but because it's weak. The ADX is 34 and rising. This downtrend is strengthening. That's what the chart tells us. As far as resistance is concerned, we've got resistance at 1662 here, and the very important support, which is, well, what was support, the 116 level has now finally given way and is now resistance. We can expect a zigzagging pattern down, but you know, we're on a zag at the moment. The zigs are the impulse moves in the direction of the trend, which is down. So I think there'll be another zig coming up soon, putting in another lower high. It's a strong fall which is strengthening and rallies. The RSI perhaps getting up to 50 or something like that. Many people would see that as an opportunity. So our old friend, this massive head and shoulders with the 111 minimum price objective becomes much more of a reality now. But that's always the case. You know, it never looked like it at the beginning, but then as it starts to evolve, it looks more and more like it, doesn't it? Now on the pound, it's a bit of a different picture here. So we've got the background of the strong dollar, but looking at the weekly here, we've got, I'm going to call this a double top pattern with the spike high here and this here. You could argue that the spike we can ignore and it's head and shoulders, but either way, it's bearish, and either way, it's the same trigger level. We broke it. We didn't come down as far as the support, which builds at 133, and it's already started to bounce, I think, to the break point here. The weekly MACD is negative. The RSI is reading 42 and rising, so we're bouncing a bit on the weekly towards resistance. So here we are coming towards this big area of resistance here, and you know, I think this, while it isn't as bearish as the euro is, it is bearish. We've got lower highs, and this would be the kind of moment where this would start to turn down again, and this reaction lose steam. So at the moment, the reaction is taking place. It's short-term bullish, but it's coming into resistance. 137, but 137.50, the actual high here, 139 in here. Various bands of resistance and a lot of trading activity resistance we're bumping into now. It's going to struggle to go up much further than where we are right now. And so I wouldn't be surprised to see early in the week some weakening in this chart. Here we have rallied above 50. That's as good as you often get when we're in a downtrend. You just watch out this week for a turn in that. It's going to struggle to push up. I think that's the case there. Then moving to the Canadian dollar. Now you remember on the RRG chart here, the Canadian dollar up here and pointing northeast. Now how good is it actually here? So let's look on the weekly chart first of all. So this is the dollar itself. So this fall here is strengthening of the Canadian dollar, which we're seeing on the RRG chart, and it is strong. It is looking good. The MACD is about to cross here, and the RSI has come down through 50 from above. We could argue this is the head and shoulders on the weekly here, high, higher high, lower high, and last week we broke the neckline of it, and that would indicate a move down to 122. On the daily chart, here we see the lower highs in pattern high, lower high, breaking very important support here at 125, and now the next support level for it to test is the 124.18 level, but I don't think that's particularly strong support. The technicals are negative in here. This is negative for the dollar. So if you wanted to really leverage this move, instead of selling versus a dollar, sell versus the Canadian dollar. And it sits there more or less on its own. I don't think the Norwegian crown, which was the other one which was right of 100, is that good a looking chart actually as the Canadian dollar there. So Canadian dollar notable for its outperformance even of the US dollar, which is outperforming pretty well everything else, and in particular the euro. We're going to move on to the cryptocurrencies next, but do we have any requests or comments?
No, Trevor, not so far.
Okay, let's move to the cryptos then. That's where the action is, isn't it? Yeah. The real market. So you can see this is the US dollar here. Everything on the right is stronger than the dollar. And if it was heading north, that would be also with positive momentum. So these are in pretty good shape here. This is the last 5 days of activity here up to Friday. And we know what's happened this morning. We'll have a look at the chart in a minute. This is looking good. These are looking good. Didn't we see that in the last couple of weeks? We saw this in the RRG chart. This outperformance starting to happen in a outperformance of a strong security, and here it is now. It's crossed over the 100% line and shooting over to the right. So this is the best game. Canadian dollar, yes, quite good. The US dollar, very good. But cryptocurrency is good. But they're not the same, I've got to say. So let's have a look at these in detail. And we'll start with Bitcoin. And Bitcoin, it's the nature of the tops which are different and the distance from the tops, the old highs. So let's look at the weekly here. So we have this big area of resistance here. Take that circle off there because it's really a much bigger circle than that. So we had the big top, head and shoulders case there. We punched hard into it with a lot of power, I've got to say. The MACD is positive, the RSI is positive, and we're moving strongly towards this, which is really centered on where we are right now. So we punched hard into that, quite impressively hard into that. So here is how it looks on the daily chart, pushing ahead strongly. The break of the 52,948 high was very significant, broke that impulsively there, and now we're powering on ahead, doing strong after the weekend session. MACD is positive, RSI is positive, trend is 31 and strengthening. It's getting stronger. This is looking like it's making a very serious attack on quite strong resistance, but it's got, with the Bollinger Band shape like this, with a lot of increase in energy, this can do it. I think it can do it. Ethereum is a bit of a different chart, isn't it? Look at the nature of the high. Do you remember the high was that sort of complex head and shoulders, but Ethereum has got two highs in it. It's a 4029 and 4384 are the two highs here, and we're still below both of those highs, but they're V-shaped tops, both of them. They're not wide, deep tops, so neither of them are in themselves pretty strong. They're psychologically strong, particularly this one, but not probably so much resistance there. So we're pushing up towards them. The MACD is positive. The RSI is also positive in the weekly picture. So here we are approaching a minor resistance point and having a bit of trouble with it, to tell you the truth, here at 3680, and then the high here, which I mentioned previously. So we're struggling at that, and it's looking like it's going to break it. The technicals are good, the MACD is good, the RSI is positive. The ADX is at 16, which is a low reading, telling us we've got churning. So we haven't got such a strong picture here in the short term as we have in Bitcoin. And we've got two highs to break, and we haven't got the velocity at all. So of those two, Bitcoin is the better of the two. Looking at Litecoin, here on the weekly chart, this came down a lot more than all the other ones. And it's also quite a lot below important highs. It's got two highs to break. This one here at 235, and then of course the all-time high for 410 there. We're a long way below those, and we're forming some sort of consolidation here, but it's not particularly strong on the MACD. The RSI is just above 50 and is pointing up on the weekly chart, and so here we sit below this 190 resistance level. 200 should be some sort of resistance from a psychological level, and then these two spike, the spike high and the other high up here. Quite a lot of resistance around where we are now. There could be a sort of catch-up swing from this, but it is a long way down and got a lot more resistance to it. It's looking bullish. I will say that's probably going to go up, but the excitement is really, the order of excitement is Bitcoin first. Great looking chart. Look how different that is there, pushing clear into it and towards these resistance points, but it's moving much more purposefully. Then Ethereum, which has got some heavier resistance, it's going to be harder for it to go up. And then Litecoin, it's really low and struggling. So I think the lead is going to come from Bitcoin, Ethereum, then Litecoin in that order. Right, now moving to the precious metals. We should, inflation. Inflation's now the buzz, and we've got lots of signs of it. It's being led by raw material costs, energy in particular, but also many other commodities, cotton and things like that, 10-year highs, industrial commodities, lumber. So all the signs of raw materials cost inflation. Many places we've got near full employment, we've got wage pressure, we've got a lot of build up, and inflation is a actually desirable thing for many governments because they've accumulated massive amounts of debts, and how you can devalue the debt through inflation, and so that a modest inflation makes a debt furnishing cheaper for governments. So I think quietly they'll tolerate that a little bit. Probably particularly in the UK and the US. But the problem is that inflation is a difficult animal to control. Deflation you can stimulate usually relatively easily. Japan struggled, but elsewhere, quantitative easing was a successful operation for that. But now, once you stimulate inflation, it's a difficult animal to control. It seems to embed itself in people's psychology. They get used to it. They get used to everything going up. They keep demanding more money in their pay packets and things like that. Or even when inflation doesn't exist anymore, it sort of stubbornly stays in psychology. I've lived through several bouts of inflation, and I know how difficult it has been for governments to actually control the sort of self-fulfillment that goes on in people's psychology of inflation. We'll all be demanding more wages and expecting our house prices to go up and things like that. So let's have a look at the normal hedge against inflation. Now, normally you'd go for gold, wouldn't you? Traditionally, that would be the case. But it's looking like nothing. It's sideways, isn't it? This is where this should be soaring here. It should be, hard currency, strong dollar. I mean, really, gold is probably in any other currency terms is going down. If you look at it in pounds or rubles or anything like that, it's because it's just moving sideways, isn't it? And so I think that anybody who says, your inflation hedge should be gold, it's not. I think your inflation hedge should be Bitcoin or cryptocurrencies. That is a different game there. So here we are moving sideways. This is the weekly chart, of course, of it. We've been around this level of 1750 for weeks and weeks and weeks, and through the second half of the year, since we made our highs there above 2000, and it continues to look sideways. And the technical's looking sideways too. On the daily chart, excuse my jumble of Bollinger Bands and lines and things here, and Fibonacci retracements, but essentially we're ranging here, 1720 low, the spike low here at the spike low at 1684, and then much resistance above us here. And it really, the RSI is at 46, nearly 50. It's just, and the ADX is at 17, no trend in the market. What's it doing having no trend in these conditions here with the strong dollar and the inflation? And so it's just looking, soggy, very soggy indeed. Before I go on to the silver, let's look at the gold-silver ratio here.
Actually, Trevor, can I just interrupt you for a second?
Yes.
Yeah, so we haven't had any questions so far, but if there's one thing that Trevor loves, it is deep penetrating questions. So please don't be afraid to write us a question in the questions tab, and I'll pass that question on to Trevor. Thanks. Sorry, Trevor, continue.
Yeah, I like deep questions. I like those. So let's look at the gold divided by silver ratio. So rising value here is gold outperforming, and we have been outperforming in after the summer period, gold outperforming. We had that big spike there, but generally we've been moving up, and the MACD has been moving up. But I just wanted to show you that we've got a bearish divergence here in the RSI. High, 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 higher high in the ratio, and then lower high in here. So this has really come to resistance, which we had noted around 80. for the ratio, and it's got a bearish divergence. That could be it for the gold silver. So either gold continues to move sideways and silver comes up, or silver gold starts to move down with silver. So let's look at the silver. Now silver's not looking good at all, is it? So it's got lower highs in here. It's testing this support level at 22, $22. It's very important level. So far it's holding it, but the MACD is weak and the RSI is weak as well. You know, this looks very vulnerable and very dangerous, because if it does break the $22 level, there's no support then down to around $19. So we could have three very fast dollars downwards, because we rose so quickly up here. So it's an absolute danger point here. And so here we've got a small amount of bounce, but look at these candles here, very small bodied candles, doji type candles. It's already losing power at resistance at 2250 area, and this lower highs pattern going on here. The RSI came up through 50 and it's turning down again. You know, we could start to weaken here, and so it could be a, I don't know how to say it, but a race to the bottom here. And yeah, it looks pretty unpleasant. I know we're just in the background though. We've got something going on at Palladium, different. Palladium's not one of our markets, but it shot up last 2 weeks there. And so it's going against the trend of the other precious metals, Palladium, but it's a minor metal. Okay, moving on now to the crude oil, the Brent crude oil specifically. This is moving up. This is getting the benefit of the inflation, or causing the inflation. So at the moment, this is very strong. We've been banging on about this over the last few weeks, and once it broke this big cigar here, and it cleared it, and we've been powering ahead. So here it is on the weekly chart. But I want to bring in some more data here. Whoops, not that way, that's moving to the right. What I meant to do, excuse me, this is what I want to bring in. So this high here, this 2018 high, it was in July 2018 high, we're approaching that. If we do break that, and we're approaching it very purposefully and very powerfully, the MACD is positive here, the RSI broke, it's the divergence line. I'm going to take that off now, the bearish divergence line. We just had, that was the warning of this drop, but now we've recovered from that and we've broken it, so that goes now. So the market is strong again, and it's breaking and testing this high, which I don't think will present big resistance. But then we go back to this 4-year consolidation that we had in here. You know, crude oil was always at $110. Just churned and churned around there for 4 years, low of around 95 and high of about 125 here, but it just was always the same price, crude oil. So that created a massive amount of resistance. But we're the journey between here, where we are now, let's say at 84, up to around 110 area here, could be quite speedy. So I think that there's a potential here of another big break, like we saw here, but an even more important one as we go through this area where we just fell like a stone here. There's no resistance here until we get up into here where there's a lot of resistance. It's a bit like FTSE, you know, got years, a 4-year resistance level there. So I think more excitement is due on the Brent crude oil and the WTI as well. So I'll just make that more sensible chart. So looking good. We've had a little bit of a pullback. You know, it's resting, it's correcting as it goes, and we should have an good early part of the week, and then we're due for another mild pullback, maybe buy opportunity as well. So watch any approaches towards 50 in it if you're lucky enough to get that. for another buy opportunity in this strong market, and watch the that July 2018 high for an impulse move following the break of that.
Trevor?
Yes, please.
Sorry, I thought that was the perfect opportunity to cut in there. I wasn't sure if you finished. We've got a question from Daniel Blake. Thank you very much for your question, Daniel. He says, sorry, this is going back to gold now. What is really causing gold to range like that?
Well, as a technical analyst, I would say, it's the range itself is self-fulfilling, and so the builds up the range, and the more activity takes place, the more the price itself becomes a magnet. But as far as from a economic point of view, I think, could it possibly be that gold's just completely out of fashion, in that it's not what it was? Gold's value is really made up of two things. Its intrinsic value, and it has an intrinsic value. You could argue that Bitcoin hasn't got an intrinsic value, but gold has got. You can use this as an industrial metal. It's a good conductor of electricity. It's malleable. It doesn't rust. It's very important in electronics. And so if you took away the fact that it's also shiny and beautiful, and we love to have it, and I would love a gold Rolex myself, and all that aspect of gold has got a use. And so it's even then it's surprising that it isn't steadier like other base metals are, the ones that don't shine but have got that characteristic. So it is really surprising that this is the case. But then there's a premium to that, that intrinsic value, which is the sort of nebulous thing of value of gold. I love gold. I'd love to have it. When the aliens invade, I would really think that I would like to barter with gold rather than US dollar bills, and all this sort of aspect of gold. But it isn't showing that aspect. That aspect seems to be going through into the cryptocurrencies. I'm not saying this is the case, but it could be argued, or the evidence is increasingly something that the fans of the cryptocurrencies have been saying for a long time, that cryptocurrencies will take over the role of gold. And then there's a good case for that. There's a good, in some respects, it's better than gold. It's certainly more portable, and if we have a nuclear conflagration, your stockpile of gold will become radioactive. Maybe it's not worth anything. Whereas your cryptocurrency, even with two servers in space, apparently, there are 6,000 servers there are for it, 2 are in space, and so it's probably going to be resilient in come the day. But I wrote an article about that some years ago. Come Armageddon, would you rather have Bitcoin or gold? And it was a slightly tongue-in-cheek article about it, but there's a lot to be said for actually having cryptocurrencies rather than gold. And gold, although it's got a lot of value in per ounce in it, it's not as cryptocurrencies are lighter, they're more portable. And so that wasn't really the best sort of answer for that question. Why is it so stubborn? But I think it's stubborn through neglect. Good question. I don't know. I suppose I should be more honest and say I don't know the answer, but I can see what I can see, which is that it's not going up. And that's a great disappointment, because a lot of people.
Sorry, Trevor, I just interrupted.
Yeah, just one more sentence. I just that's a big disappointment for a lot of people, because a lot of people invest in gold. They hold it for the long term. I know a person who even rents his house, and he's a wealthy guy, and everything he has is in gold. And that's pretty disappointing to him. He'd have been better owning a house in the south of England than owning gold. I'm sorry, Dan. You go ahead.
Yeah, no, it's fine. No, we actually, because we've got another question here, but this is again going back to crypto. The question's from Gert. Thanks very much for your question, Gert. He says, what is your target range for Bitcoin and Ethereum for this current bull market? Ooh.
Right, that's a good question. Thank you. That's a good question. So let me go to this weekly chart here. The question is, where do you start with doing your measurements? I'm going to head for Fibonacci, obviously, to help me here. And I think We can either start here, 10,000 for the measurement, where it really started to lift off, or you could take a lower one at 5,000. That is half of it. Let's take that 10,000 to be conservative, but I could argue 5,000 where you should start. And then I'm going to do the Fibonacci projection. So I'll do it from here. So here's A, B, and then down to these lows here. So what I've done is I've taken the length of the move here from 10,000 up to the all-time high, take that length and add it to the big pullback to 30,000. So where do we get to from that? And that takes us to 84,157. So if it breaks this high, you know, I really do think it's going to go to that. I think it's because of the power of that move up, which was so powerful. There's a lot of bullish energy in this market. You know, and I've been working a lot in the energy market, and I've been seeing how, you know, gas and coal and carbon and things like that, how these Fibonacci projections have really worked well. And we've gone through 100%, 161.8 to 261.8 in some cases with no pullback, so you couldn't redraw the lines. And you know, just a reminder of you know, the sense in measuring how strong are the bulls, they're that strong. How the bears, they were that strong. That was 50% retracement there. Of course, it was a very severe and damaging fall, but it wasn't 61.8 as it was, say, in Ethereum. It wasn't more than 61.8, which it was in Litecoin. And so this is quite a strong one here. So the implication of this is if we can clear this resistance, which is doing an impressive job of going into, because it's quite stiff resistance, but it's approaching it in a very purposeful and determined sort of way, then I do think we can accelerate hard here. You can imagine the psychology that's going to come in, you know. People remember how lovely that was there, and they won't want to miss out on the next lovely move, will they? They'll be charging into it. But the resistance at the all-time high. And that's where everybody will pay attention, isn't it? It's a very psychological moment, all-time highs. So, you know, people who don't really watch it, or they'll be on the BBC News and things like that. And that brings in a lot of bullishness in itself. So, you know, clearing the high is important to do, but up on balance, it looks good for, you know, it's approaching it in the right sort of way to do that. It's got a lot of power, it's gaining energy as it approaches it. And then I think the next swing can be big after that. So yeah, I'm a bull. But I should say other cryptocurrencies are available. Okay, shall I push on to the stock indices since we're...
You can do, Trevor. We do have just one more question before you do. This question is from Kinza. Thank you very much for your question. The question is, can you please explain GBP USD? Long-term goals, bull or bear? Oh, thanks.
Well, we did cover it already, GBP.
Yes.
And you know, the long-term picture is that we've got this toppy shape here. We broke down through the neckline of it, and we're bouncing back to the neckline. And I think that this will run out of steam, is my view, and it will ease back again. Because it won't ease back as much proportionally as the euro, which is proportionally much weaker than GBP. So if you want to sell something versus the dollar, I would prefer the euro to the pound, but the pound is also weak, but that's more not weakness of the pound, it is strength of the dollar. And you know, I think here, you know, we hear, oh, the pound is weak because of you know, this and that reasons, but it isn't. It's not the pound that's weak, it's the dollar that's strong. Actually, the pound relatively is pretty resilient compared to other currencies, big currencies like the euro. So I think I had answered that question, actually.
Yes.
Yeah. Okay, so moving to the US 500. Here's a weekly chart, and you know, when you see this pullback, the seasonal pullback that we've had, it looks quite modest, doesn't it? It's still negative on the MACD. The RSI is still negative as well. But looking at the daily chart, it does look as though it's already bottoming out. And remember, we talked about this extensively previously. We've got this very strong dominant seasonal pattern that is in play in in the US stock market, where we are in this seasonally weak period, which started at the end of last month. We've had a seasonally weak period here. It doesn't have to be more than this. So on occasions, it is a total wipeout collapse. But this might be it now. But what we are coming into, which is an even stronger dominant seasonal pattern, is starting late October. We're mid-October. We're not late October yet, but it's never that precise. It could start now, or it could start later at a lower level than we are now. And we go into the strongest period of the year, which lasts right into December here. So the biggest percentage gains in the stock market over the last 20 years have been made in that period, from the end of October to the end of the year. So we're looking at a weak market there, but we're approaching a seasonally strong market. So if you don't buy into the idea that we're about to have another crash of 87 or Wall Street crash or something like that, you look at it the other way. It's moving into what's potentially a buy area here. It doesn't look actually that weak to me at all. And so it may even be stabilizing already, maintaining the pattern of higher lows perhaps here, and a break up through here, 4463 high here would indicate to me that we will be quite quickly back at the highs again after that. And so we're on the verge really of looking quite good again. So I think we're definitely in the, there's no such word as definitely, but I think that we're in the terminal part of, yes, I nearly said definitely, didn't I? We're in the terminal part of the fall here. And then moving now to the UK 100. Now this is an awful looking chart. Here it is. Here, let me show you the weekly why I hate this chart so much. We've got this massive area here. This is a bit like crude oil in the 95 to 125 dollar zone here. We've got 4 years of consolidation here where we move sideways, and we've come up into it, and it's stalled here. 7,200 is a concrete ceiling for the FTSE, and it comes from that consolidation here. Everything's weak in the technicals too. This still looks quite toppy and quite vulnerable to either at very best moving sideways or continue to underperform. And it's very difficult to find good securities in this market. You should definitely be looking elsewhere, US predominantly, I would say. I missed out accidentally the Tech 100. This doesn't look as good. Sorry, here's the weekly chart. Here it's come down a lot. The big support comes in at 14,000 here, and it hasn't quite reached that yet, but it's still looking bearish there. And we've got a weak rally here. This looks less like it's bottoming out, if we can believe that, than the US 500 itself. And we have seen the FANG stocks have been some of the leaders on the downside of the fall. There's a lot of froth and room for correction in there, and I think it looks like the broader market is going to be more be the earlier to find its footing and start to rise up than the glamorous tech stocks. So moving now I want to talk to you and end up with the German market, the D30. So on the weekly chart here, this looks very heavy indeed, doesn't it? And very threatening. We are testing these lows here at 15,000, very important level, very negative patterns in the weekly technicals here, and this is very threatening indeed. We're right at the point here, and this could take over the lead of being the worst stock market from the UK 100. And this is very top indeed. I loved it previously. I loved it, and we did have a good run on it, but then it lost momentum. We had bearish divergences into the high here, high, higher, high, higher, high, high, lower, high, lower, high. So it really lost momentum up in here, and now it's turning down, I think, quite dangerously hard here. So watch out. You know, this could slip hard, and this could be, of course, a reflection of the euro, couldn't it? Here, so it's a yeah, it's looking very, very dangerous. Haven't got much support. You know, we probed into support here, but 14,818, but really 15,000 is the big level. If we can really break 15,000 impulsively, it can really gain some momentum on the downside. All right, Dan, did we have any more questions?
No, that was it. Thanks, Trevor. I think we've exhausted them today. There we go. Thank you very much. Well, thank you very much for attending, everyone. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, you can do so there. Or if you just want to watch a piece of it, you can do so over there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified if you do go to YouTube. Also, please don't forget to complete the survey that's about to pop up in a few moments. It'll help us improve your webinar. Okay, Trevor, anything else to add?
No, you know, I think we've covered it there. Watch this dollar. You know, watch the gold fall asleep. The stock market, US stock market specifically, because that seasonal pattern is US. You know, unique to the US market. Watch out for that, but seemingly led not by the tech stocks that we're used to, but by the broader market. And then watch out for Germany. Thanks very much indeed. Thanks for the questions. I really appreciate it. I really hope I answered them properly and thoroughly enough. And thanks very much indeed, everybody. Thanks, Dan, for looking after us, and may the trend be with you.
And also with you. Thanks, Trevor. Don't forget to close the webinar, please, Trevor. Thank you very much.
Okay. Thanks, everybody. Bye-bye now. Bye-bye.
Bye-bye.